In this episode, Ryan and I talk about life insurance underwriting, ratings, cannabis, and stories from the front lines. And we had fun doing it. Thank you for listening. Hope you enjoy. All right, welcome to the Banking with Life podcast. I'm your host, James Neathery.
And I am your co-host, Ryan Griggs.
And we're here Saturday morning, having fun, excited to be here. And I hope some of the pre-conversation is recorded so we can release it later, because Mr. Griggs was extra funny this morning.
Okay.
So, all right. Thanks for listening.
Yeah.
We actually did come up with a topic.
We have a topic, a dedicated topic, and it's the subject of underwriting status.
Underwriting in the life insurance industry. Yeah. But too, as we were talking this morning about underwriting, all of this really came from, it comes from our experience.
Yeah.
And then some of the experience recently in the last couple of weeks. So in addition to underwriting, we're going to bring in kind of a separate, there's going to be a distinct difference, all right, separation between underwriting, ratings, and stories from the front lines.
Yeah. So 2 segments here. We'll cover the more technical topic, but based on questions that we get and concerns that people have, and then move to some stories, and I'll try to maintain my composure through all of those.
Oh yeah, you can do it. So I mean, we if we talk about underwriting, let's just life insurance underwriting. Everyone knows that life insurance is issued based on age and health, right? If we should know, right? If we don't know, now we know. All life insurance, it's priced by age and health, right? So
the face amount is
the life insurance,
right?
Yes,
the death benefit, right?
And there's, I don't know if we can really even get 2 segments into this one episode, because you can really unpack an awful lot.
Well, let me set the stage. Okay, so we interact with a client. They've, of course, watched the entire podcast. They've read Becoming Your Own Banker 5 times. They're ready to start infinite banking. So we make contact, we have our initial conversations, do a financial review, maybe review of whatever other life insurance may be in force. Eventually we get to an application, submit an application for a new policy or policies, and then the underwriting phase happens, where underwriters of the life insurance companies evaluate the financial and the medical status of the proposed insured, and in some cases the owner as well. At the conclusion of that underwriting process, a particular status is assigned to the proposed insured on the application, right?
Called a rating.
Yeah. So you might be, and of course, leave it to the life insurance companies, leave it to American financial corporations to apply any number of different terminology and vocabulary terms to these various ratings. I sometimes describe it as, getting on one of these particular airlines that's begging for a bailout right now. They've got
they're all begging
8 million different boarding groups, right?
Yeah, diamond plus,
gold
ruby,
studded,
silver, platinum plus, world traveler plus platinum.
Yeah.
And then you're in group 1. You're like a 75th person to board, right?
Yeah.
Yeah.
So same principle in life insurance underwriting, all different sorts of names, right? But in general, there's usually a standard, right? Average, the majority of people who have the average health, a standard underwriting status, and they'll normally distinguish between tobacco or nicotine users and non-tobacco, non-nicotine users. So you have a standard non-tobacco.
And then the cannabis user, where do they fit? How does a life insurance company look at that?
That's a legitimate point to make there. It
is.
Yeah. And oftentimes a life insurance company will treat the presence of cannabinoids, right? The presence of
THC.
Cannabis in the blood, THC, as nicotine.
And here, let's just talk about this for a minute.
Not saying that's right or anything. Just
brought
saying
up
that.
The life insurance company is just trying to properly price life insurance, the death benefit, right? Which they don't want to pay anytime soon. They're going to pay it because it's a guaranteed obligation to the life insurance company.
Yep.
So they're going to pay it. They just don't want to pay it anytime soon. And they really only have one opportunity to underwrite you. You
Yes.
have a 120-year life expectancy, and you're applying for life insurance within a 2 or 3, 4 week period. That's their opportunity to get it right.
Yeah.
But on the hemp, on the THC, the cannabinoids, and it makes a difference whether you indulge smoking or using edibles, whether you're in a state that has legalized recreational use or medicinal use. So all those things make a difference. Here's what I have found to be true. Life insurance is a Western concept, a Western civilization concept. And so they use Western medicine to underwrite life insurance. All right. And there's really no historical data when it comes to cannabis use on the life expectancy of the individual.
Right.
And let me tell you what, I've said many times, I'm an anarcho-capitalist if you have to put me in a box. I don't care what you do, just don't harm others and don't steal. You know what I mean? Just kind of, all right. So if you use cannabis, God bless you.
Yep.
Right. I talk with the underwriters all the time, and I'm like, aren't you going to feel awkward whenever the data shows that cannabis probably lengthens the life expectancy,
improves the mortality experience of the company?
And so, and they're, they are great individuals. They're just, that's their job, is to do.
Well, then what can they do? There's a mountain of regulations.
Yes.
And everybody looking over their shoulder.
Yes.
They got to follow.
And Western
their
medicine
little guidelines.
says this is bad and it's going to kill you. And I'm just saying, if you're going to own life insurance, let me just point out that if you own life insurance, and that life insurance company, has a method or to price life insurance for people who use cannabis in any form, and you're a policyholder of that company, and my expectation turns out to be correct, that those policies are going to be much more profitable for the company, it's going to directly affect my dividend because I'm an owner of the company. I'm just saying.
Imagine that.
Well, thanks for letting me talk about cannabis.
Absolutely. Well, so that goes back to the point. So there's usually a distinction between nicotine or cannabis users, non-nicotine, non-cannabis users.
And some companies put the cannabis user into the nicotine, category.
Right.
And
that's what I'm saying.
Some do not.
Yeah. And so there's that distinction. There's the standard distinction. There's usually 1 or 2 ratings above standard for superior health status. Might be preferred, super preferred, whatever the various.
Plus, diamond plus, ruby plus. Yeah.
And then below standard for varying degrees of substandard or what are called table ratings. There's any number of 5, 6, 7, 8 different degrees below standard. And so you might be table rated A or table rated B or C or D, right? These are all various degrees of substandard.
G, H, I,
and
J.
The change in your underwriting status affects the pricing of the death benefit, right? So,
well, where you're at the time of application.
Right.
Because that's what they're looking at. If it changes in the future, it only changes if you're purchasing more or going through underwriting in the future.
All this is at the time of application.
Once a policy's in force, it's in force, period. Mm-hmm. As long as you pay the premium, right? Yeah. As long as the premium is paid.
But understand what I'm saying there. Like we're talking about the effect on the pricing of the face amount, on the pricing of the death benefit. Right? Oftentimes for the purposes of the infinite banking concept, we're interested in accumulation of cash value, of capital, right? So 2 different things there, right? The pricing of the death benefit, and then a separate question, okay, is there an effect on the cash value? And in most instances, unless there's like a severe problem in the underwriting or in the medical record, the determining or the, how should I say, the most influential factor determining the accumulation of cash value is not the underwriting status. It's the composition of the policy. It's the structure of the policy, the way we allocate your total annual premium across the two main components, right? That composition, the structure of the policy, is what will have the greater influence on just how much cash value you accumulate and just how quickly you accumulate it, right? So don't mingle the two together here. We are talking about underwriting status. We're talking about rating, because oftentimes, maybe we should have started here with this, because
I wanted to talk about cannabis.
No, I see that. You're wearing green. It's like, what are you up to on a weekend here, quarantined in Texas? The reason we want to talk about it is because it does come up. Right? We get people who are older, have a higher, quote, attained age, or people who have a significant medical history, or maybe they're managing a chronic condition, something like that. And they're concerned that that medical record, their prospective underwriting status, is going to affect their ability to do the infinite banking concept, right? That's a question we get. That's why we want to talk about it. It's not talked about a lot by the various marketing gurus and internet huckster types, because it's an in-depth topic. But we gonna get it, right? So my initial precaution is to not preemptively preclude yourself from doing infinite banking just because you think you have a health history. And you may, in fact, do. The other thing that happens is that people who believe they're healthy, who come to the table, who go to an application, discover that some doctor who was worried about a lawsuit put a little note in their medical record and forgot to verbalize a recommendation to go see a specialist to the person who thinks they're healthy.
Forgot. Or just as a matter of practice, doesn't discuss all the notes that is in one's medical records.
Right. Maybe they're only allowed by hospital administration to spend 8 minutes with you, so they got to pass the pleasantries and then move on. Whatever the reason might be.
They've got to see 65 patients a day. All right.
Listen, I'm not trying to do math this morning.
Okay, perfect. Listen, when I learned that, when I learned the importance of medical records, it was about a long time ago. Okay.
Yeah.
I had a client going through underwriting, and initially the company didn't want to issue the policy. They wanted to decline it. They wanted to decline it. And so, you as an agent, advisor, you go to bat for your clients, right? So getting down to the root of that issue, she lived way out in the country on the outskirts of a large town, okay, new subdivision, and she got up one night and took a shotgun to some skunks or possums or raccoons in her trash. Right, so the city doctor, and then she had a doctor's appointment. She goes to the doctor to get a checkup. She was fine. She actually eventually got issued standard. But the doctor's making notes in the medical records about her adventures the night before. And I don't know what the commentary was. I don't read the medical records. I'm not a physician. Don't want to be an underwriter. But I'm just saying, what did the city doctor have the need? Why did he have the need to write that in the medical records?
Maybe he felt intimidated.
Maybe he did. and maybe he did. And then, but too, when we try to preclude ourselves, or quite often, I see and I hear, I'm sure you do too, where, I want to put policies in force on my children because they're going to have a better rating.
I hear that all the time.
The cost is going to be lower.
Yeah.
And at the end of the day, life insurance is priced as a cost per thousand of death benefit, right? So we all pay a price for the death benefit. And the older we get, the closer to mortality we are. The cost of the death benefit is higher.
Right.
All right. So in dividend paying whole life, in whole life insurance, even traditional stock company issued whole life. I'm not talking about universal life, and I'm not talking about term insurance. And it gets very, very fundamental to what is wrong with universal life insurance is the cost of the insurance. So in whole life insurance, once a policy is in force, the cost of insurance doesn't go up. That is built in. It's all combined. The cash value, the death benefit, right? So it doesn't change into the future. So if I'm younger, the cost of the, so I say it like this. If I'm going to pay a $10,000 premium, for example, and I'm 20 years of age, I may have a $400,000 death benefit. And I'm just talking numbers for illustrative purposes. If I'm 30, the same 10,000 in the same structure, trying to structure for cash and buy just enough death benefit so I can have as much cash as possible without jeopardizing the integrity of the policy over my lifetime, I'd wind up with maybe $300,000 in death benefit. And then the older I get, the death benefit comes down. We're solving for cash. It's going to be relatively the same, or very, very close. The adjustment is on the death benefit. So the older I get, if I pay a $10,000 premium, I may wind up with $100,000 or $150,000 base amount compared to the 20-year-old that has a $400,000 base amount with the same premium. But so the cost of the death benefit is higher as we're older, of course.
Yeah.
Because we have a shorter time period to pay premium before we graduate.
Yeah.
I mean, it's all math. It's mathematical.
Let me load that up a little bit. So, I want to make sure we're not losing anybody here. When we say that
y'all were with me, right?
When we say that,
my interpreter.
You said I'm not interpreting you, but I want to go deeper. When you say it's going to be relatively the same. When you say the cash value is going to be relatively the same for the same amount of premium paid to a policy where the insured is 20 years old versus 30 years old. What we mean by that, so recall that, like if you look at equipment financing, Part 4, Nelson Nash, becoming your own banker, and that little upper left or upper right-hand corner where they break out the premium.
Thank you.
You see the difference between, he's saying that because you want to tell him why you're saying that? Who made the suggestion to put that?
At one time, I don't remember what edition it was, but that key was not on each page of the illustration. Part illustration 1, 2, 3, 4, and 5. Yep. It was my suggestion and encouragement that key be on every page.
Yeah, and it's good. And it's good that it is there because it illustrates very clearly that total $40,000 premium is being split across the two main components: the base premium and the paid up additional premium, or PUA premium. And let's preface this little idea out there in the world that the base pays for the death benefit and the PUA buys cash.
Oh my God.
Can go fly a kite. I mean, that's not correct. Paid up additional refers to paid up additional death benefit, right? It's not as if the PUA is purchasing cash. You can't purchase cash without buying the death benefit. Right? The cash value is the net present value of the death benefit. You only get cash because the PUA is buying death benefit. Right? So that terminology is incorrect. And it's not helping anybody by diluting and simplifying for the sake of marketing.
Well, it may be helping them short term, the marketer, the hucksters that are saying that to like dumb it down. Yeah. Right? It's like this buys death benefit, this buys cash, is completely wrong. Not only is it wrong, it's misleading.
Yes.
Right? And I wonder sometimes, I really do, I wonder if these individuals know the difference, or are they ignorant and don't know?
Yeah. We should assume angelic intentions and happy little ignorance, and everyone's just doing their best, right? Yeah. Well,
and so, and two, if you pay a premium, if you write a check to the life insurance company, you're either paying a premium or you're paying a loan repayment, period. So money into the PUA is premium. Money into the base is premium. Money for a term, rider, if you use them, is a premium. It is all premium. Premium. And there's two distinct cash flows. If I'm paying a premium and I'm collateralizing the cash value to do some financing, and now I'm going to create a loan repayment, those are two distinct cash flows.
Yeah.
All right. So all of these exciting, mesmerizing presentations and cash flow charts that come up on the left or the right, I think a lot of them are built exactly to mesmerize. And I'll save some of this for the stories from the
just
front
jump
lines.
Clean ahead and get right into the next.
Well, let me tell you what. I had a conversation.
I was kidding.
I'm not, so I don't want to forget. Last week, the week before, this week, James, we've talked to so-and-so and so-and-so and so-and-so, and I'm like, that's great. And they provided these flow charts and blah, blah, blah. Can you provide us a flow chart? And I said, no, absolutely not. The people that you have spoke with in this particular case were very competent, right? And their flow charts were pretty similar, is what I was told. And I'm like, they're very confident to create flow charts. Why would you want me to create another flow chart? And then I kind of admonished him a little bit because, he'd been kicking around the idea of the infinite banking concept for 6 or 7 years. And I'm like, my God, man, what's wrong? So I'm just saying, you don't need a flow chart. I mean, can it be beneficial? It can be if you're a numbers person and a spreadsheet person. I understand that. If you understand what's going on with a dividend-paying life insurance policy as structured from the genesis of Nelson Nash, and then you understand the company, the mechanics of the policy that you put your money in, and you're working with a competent, confident, knowledgeable practitioner, you will get to success, all right?
Yeah.
And you don't have to be mesmerized by flow charts and presentations. So,
Feel better?
Yeah, a little, yeah. Progress.
Okay, I am going to button this point up.
Okay.
So there are 2 component premiums, base and PUA. Going back to this idea that you have the relatively similar cash value accumulation for a given level of premium paid either to a younger person or paid to a policy where the person insured is younger versus a policy where the insured person is older, right? When we say that the composition of the premium is what is the determining or the most influential factor on the cash value accumulation, it's because the paid up additional premium, that PUA premium, is what's driving cash value generation in the early years, right? So it's a question of how much of that total annual premium, of that given premium, is going to the PUA. That's what's driving your cash value accumulation early on, right? And that's why
first 2 years.
And that's why we say that that's why I'm trying to make a distinction between how underwriting status affects the pricing of the death benefit, right? The underwriting status and the composition of the policy as far as how the premium is structured are 2 totally separate points.
Absolutely.
Right? And so you can have someone who's rated preferred and someone who's rated table A and build the policies with a similar structure with each and have similar cash value generation in the early years. Yeah. Right.
Yeah.
So we have to, but it's a big problem out there that we think that, because I'm older or because I'm unhealthy or because I've got this medical history that I therefore cannot be the insured person. I cannot do IBC because of that underwriting status. And that's just, we're crossing categories.
Yeah, exactly. That's one separate. Distinct, yes, you should, if you want to practice the infinite banking concept, you should see if you're insurable. And if you think about that, I get it. Generally middle-aged men avoid doctors for whatever reason. And nobody wants to go through underwriting. Nobody wants to take an exam. Nobody wants to be scrutinized financially or medically. I understand that. But it is worth it if you're going to practice the infinite banking concept or if you're going to leave a legacy or all of these things that you can do with life insurance. And I want to make a couple of points here. I learned early in my career that when you go through underwriting, if there's something wrong with you medically, wouldn't you want to know?
It's okay to find out about that.
So then you can address it better than like, I don't want to find out, so I don't have to address it. And then, I don't know, all of a sudden you're 55 years old and you have a heart attack straight out. And because you avoided, health care, just as an example. Consequently, you may be healthier than you think.
That happens.
You may be healthier than you think. And I also want to say in the life insurance industry, 200 years of, quote unquote competition. What we're talking about here is nothing new other than the PUA that developed, within our lifetime, my lifetime, not yours.
Not mine.
Okay. All of these illustrations, and I don't ask for illustrations. They are sent to me and said, James, look what I've done, or look what, and God bless you. My heart goes out to many, many people. But the life insurance industry and these life insurance agents or these advisors who, can't build their own illustration, they're just trying to put a price on it. You're trying to commoditize life insurance, just trying to turn it into a commodity. I want to get the premium just low enough for you to say yes, so I get paid. Right. And then I'll be gone, and then you'll, it's like, whatever.
Because life insurance is so good that we can't pay too much premium. Right?
Yeah. Want to pay as least amount as possible. Okay. So they run all these illustrations at preferred, super preferred.
I see that. Yeah.
And you look at the driver's license, and the poor little guy is, 5'2" and 295 pounds, or whatever. Look at me. I'm like 6'1" and 250. I'm not getting preferred, and I'm okay with that.
Right.
So it's another way that's very common in the industry to create an appealing illustration.
Yes.
And then if you take that illustration and run it through one of these ClickFunnels with one of these mesmerizing presentations, it's like a shell game, right? All right, another story from the Frontline.
We're not there yet.
Yeah, we are. I said we are. An individual, an older gentleman, 60, late 60s, right? You're like, James, this is a proposal that I've been given, and I'm interested in, and I'm right there, and I don't know what to do. My heart goes out to him.
Yeah.
It's like, look at you, you're enduring this.
Exactly. No, I know. I have my own. I have my own version of that story 3 days ago.
I mean, how often does this happen? And then you look, your heart goes out to them. He's like, I know I'm not your client, but I don't know who to trust. That's like, oh. And then you go through that, and you look at what the proposal was, the man was given, and the pressure to make a decision, and it's like whoever created this should be fired immediately. And if that was my father or my friend, I would want to. Not good. I'm just saying. Yep. This particular shell game was like, oh, if you take all the money out of this, and it costs a lot of money to get out of that, and you put it into this entity, this legal entity, then you'll avoid all the taxes, and then you pay these god awful premiums for a god awful company with a god awful structure, and the client is supposed to be okay with all of that. Yeah. It's like, I'm just saying, it was a pretty good example of a shell game.
Yeah.
And the companies that the agent was writing with, and the marketing organization that the agent was presenting himself or associated with, everybody listening to this podcast episode would recognize them. And then the huckster was like throwing out the name of Nelson Nash and infinite banking concept, and even banking with life, come to find out.
Oh, imagine
Anyway.
Well, I have to say that
I've got more, so I'm just saying I've got more.
You do. And I'm just saying we structure policies better than we do these episodes, okay? But look, we have a free-flowing conversation, right? Well, I want to going back to the ratings. Just because you had notes,
it didn't mean they were like, in order. And
oh no, they're in pretty good order. But I want to make this point about the old, someone who's older or unhealthier, and you brought it up earlier, the idea of I'm going to insure my kids. Gosh, this happened like 2 times this week. I want to insure my kid. I got to get policies on my kids because they're younger. It's going to be better for them because they're younger. Right. And I just want to say, everyone can have their opinion. I'm not, I don't know exactly what people mean when they say that, but I want to make this point that we're talking about family, we're talking about kids, right? So these kids are going to outlive you, and then they're going to have their own kids, and so there's an intergenerational aspect here. So the question becomes, if we're listening to Nelson Nash and we're thinking long range, and if we're not afraid to capitalize, then the question becomes, how best can we maximize your present financial resources for the benefit of the generations to follow you, right? Generations that you might not, you won't eventually even meet. Right, so do we want to take a premium? Do we want to take a dollar of income and use it as premium for a policy insuring a child, where it's going to generate about dollar for dollar cash value towards the end of that policy year, or do we want to use that same dollar and pay premium to a policy insuring that older generation, insuring the parent, where it's going to create more than $1 of death benefit, right? A multiple of that premium dollar in death benefit, right? Now, so look, the death benefit on the older generations policies, right, for you parents and grandparents, death benefit outstanding on your life is just future premium for your kids and their kids, right?
What?
And that future premium is just going to generate additional cash value. Okay, and all that capital transfer is going to happen, on an income tax-free basis. So if there's other assets in this scenario, if there's businesses, if there's homes, if there's real estate, if there's whatever, if there's a need for liquidity, and don't we always underestimate our need for capital?
One more time.
Yeah. If there's a need for liquidity to efficiently transfer assets from one generation to the next, not just in terms of maximizing the financial purchasing power from one generation to the next, but if we need the liquidity in order to transfer other assets, the best thing you could do, and even conventional advisors agree, is to have a whole whopping load of death benefit outstanding to help you do that. Right?
Well,
so don't jump clean. So when I hear the claim that it's better to insure the kids, it's like, just make sure we're taking into full account all the potential applications of Nelson's concept, right? The even distribution of age classes, part 5, is a legitimate part of the book. Infinite banking is not just about cash value year 1, year 2, right? Infinite banking is about maximizing your financial legacy through the generations. And the nice thing is, you don't have to forfeit or sacrifice or give up. It's not a mutually exclusive decision.
No.
It's not, I'm either going to help my kids and grandkids or I'm going to improve my own financial circumstances. No, not at all. Right? Properly structured, a policy ensuring you, the older generation in the family, is going to produce cash value. It's going to be there as available collateral on a loan. Right? You will have all of the benefits and abilities that accrue to the owner of life insurance, right? You will become your own banker. And so it's not like we're giving something up in the present to benefit the future. Everything fits together. It's all integrated, right? We check all these boxes when we pay as much. It all comes down to, it's okay to pay a premium. It's always a good day to pay a premium, right? It's okay to channel those premium dollars into policies ensuring that older generation to maximize the amount of death benefit, which is just going to go income tax free and become premium payable to policies on future generations. And then that system, notice, is iterative. You can scale it off into the future, right? Your kids will do it. Their kids will do it. Their kids will do it. And it's just up, 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 and up, right? It might even call it an infinite banking concept.
What?
I don't know what the time marks on there were, but I'm going to clip that out and make a little trailer.
You should. I mean,
but I get that a lot. I have to share that with people who
every day. I mean, you brought up an even distribution of age classes. I think it's on page 71 in Nelson's Becoming Your Own Banker. And if you look at that, he separates the generations into 4 distinct generations, right? The oldest generation has all of the money. Right? Yep. And he's skipping the children and buying policies on the grandchildren. What is not necessarily fleshed out is, and there's some examples of that illustrated in the illustrations of Nelson's work, like the cost of a college education, the child $2,000 a year in premium on a child for 22 years. What's not shown is that the parents were fully insured. The grandparents were fully insured.
That's such a key point.
It's like we talk about this, and it gets back to the underwriting. You have to be healthy enough to qualify for life insurance, but there's also financial underwriting, which people don't necessarily understand. You can't put a $100,000 premium on a child if you don't have any insurance as a parent or the grandparent. So there are requirements, right? But let me say this, in an even distribution of age classes, just like illustration number 2 in equipment financing, I want you to make these connections. And you agents and advisors listening, this will benefit you if you mark the time here. And go back and listen to this and check me out what I'm saying. Illustration number 2. Nelson, in the 6 illustrations of equipment financing, didn't finance a truck until the 5th year. He paid premium for 4 years. All right. And then the logger from Eastern North Carolina was replacing a logging truck every 4 years. So Nelson didn't do anything that the guy wasn't already doing. All right. All right. If you look at the cash value in the second year in equipment financing, in illustration number 2, that logger could have financed a truck in the second year. And if he would have, all of the numbers on the right side of that ledger would have been greater. They would have been larger. They would have been bigger. The numbers would be bigger. The dividends would have gone up. The cash value would have gone up. The death benefit would have gone up. All right? And just go do the math. All right.
Get your spreadsheets, get your calculators.
Just all right. And for the consumer, for the individual vetting this, go and look, see the numbers, the concept, the numbers prove it. The very same thing could be done in an even distribution of age classes. If the grandparents are insurable, they should buy life insurance on themselves and the children and the grandchildren. And the children should buy life insurance on themselves and the grandchildren, their children and their grandchildren. Talk about generational wealth, multi-generational, intergenerational. You can't even conceive of what can be built.
Yeah.
So you've got to get past the noise of life insurance is bad and all these financial gurus that agents out here are only doing things for commissions and all the nefarious, life insurance companies. I get to the point talking to people that come to the table with preconceived ideas. And I've said it, most people's understanding of life insurance is based on someone else's misconception, right? The life insurance companies are not nefarious entities. They are not looking how to beat you out of money, right? They're not, and the average agent and advisor out there, I believe, talk about angelic intentions. I believe that they're trying to provide service for their clients. In every industry, you have the schmuck, the huckster, right?
Yes, every single one of them, all industries.
All industries. I mean, the marketplace, over time will vet them out. But they multiply like cockroaches.
Yep.
So they're always going to be with us. So knowledge is your best defense. And you know that. Of course you know that. That's why you're listening. And that's why we love you. Okay?
Yeah.
My point being is the Nelson boiled it down to 4 fundamentals. Not to oversimplify, but just to stay on track.
Yeah.
Right? Think long range. You can think past, the average American can't think past a week. As a collective society, we can't think past 70 years. Just go back every 70 years and see what keeps reoccurring in history, throughout recorded history. I'm just saying, think long term, think past, your life and maybe even the next generation. Don't be afraid to capitalize. I mean, we're speaking to this exactly. And then, because we have a tendency to think short term and we don't understand the ramifications of life insurance over time, we may be hesitant to pay a premium. And then the hucksters take full advantage of that. It's like, here, I'll contort this policy. I will sacrifice the integrity of this policy to get you to say yes so I get paid. Please get out of the industry. Please. I don't even... Just get out of the industry, right? Seriously.
Yeah.
All right. And then once you put money in there, it's like you don't have to immediately take a loan. Loans do not make the infinite banking concept better. So you've got to be able to see through all of these magical illustrations. Money in, money out, money in, money out, money in, money out. I mean, you're just wearing the staff of a life insurance company's home office out.
Yeah.
Right? You're not creating value into that policy. And now, if it's true, and it is, that capital attracts opportunity, just load up the policies on a properly structured policy with a legitimate, well-run life insurance company, and the opportunities will come. You don't have to go out and be a hard money lender in real estate and compete with the hedge funds, right? I mean, oh my gosh, how much money do you want to lose? How negative in interest rates do you want to go?
Right.
I'm just making a point that Nelson is right. He's right then, he's right now. And it's okay to embrace the simplicity. of paying a premium, right? And I've said it before too. If you have that money, that capital, you have access to it, opportunities show up, it will enhance your ability to recognize an opportunity, because everything walking down the street is not an opportunity, right? Okay, so then if you take advantage of an opportunity and you collateralize a life insurance policy, by golly, be honest. If you value the third-party lender's money at 10, 14, and 29% credit cards, I said it, I've seen lines of credit to accredited investors at 10 and 14%. It makes me question why they would do that, right? Well, and they do it for, just like the All-American family. I got a HELOC. I'm just using it just in case, access to capital. Well, how's that work out? Over time, it's okay. And I'm not disparaging any of it. I'm just saying, if you access your capital, if you collateralize your cash value, and you create an outstanding loan, be honest and make loan repayments. If you don't, excuse me, that's the same as valuing the third-party lender's money above yours. If you'll pay them 10 or 14%, but you're going to gripe about paying 6, 7, 8, or 5 or whatever to the life insurance company, there's something wrong with your thinking, and it needs to be adjusted. And it's so simple. And now I can't control the interest rates. I can't control the dividend scales. I can't control anything outside of my actions, right? And then my thoughts, it's like you disparage me on these, social media trolls, and you're judging me by your own character. That doesn't affect me unless I allow it, right?
Yes.
Okay. So, and then all of a sudden, you do that over and over and over, just a matter of time. Time's going to pass. You look up 2 years, 1 year, 3 years, 4 years, 5 years, and it's like, oh my gosh, look at how much cash value I have. Do I care what the market's doing? No. Do I care what the interest rates are? No. I don't care. I do not care. And that place is so liberating. And I encourage you to join us to get there.
So where are we? We're May 16th.
Wait a minute, man. I'm on a roll. Don't.
No, you're right. I'm building on it.
Okay.
Yeah, I have the opportunity. I have a policy anniversary next week.
You do?
Yep.
Perfect.
And I can't wait to.
Listen, you've been losing weight. You're looking really nice. Let's go get another policy. What do you say? I can take you through. I can hook you up.
My birthday's coming this summer. Guess what my gift to myself is? As much premium as I can pay.
You get a backdate to save age?
If I need to. If I can get it beforehand, then I'll do that. But if I need to, if it's slightly after, it depends. But yeah.
Do you know what company you're going to use?
I have a strong idea. Yes, I do.
Is it only one?
I even know who my advisor is going to be.
Look, do you? How many are you married to the life insurance companies?
I am an independent contractor. I don't work for anybody out there, and I get to choose which I'm highly selective about which companies I will work with.
What do you got to do? Do you look at is it one of the big four? I got to ask.
No. It is not. It is not.
I ask that because I hear that all the time. James, why don't you use a big four? Yeah. I'm glad you asked. And then I have the opportunity to share why. And no disparagement to the big four.
None at all.
Yeah.
None at all.
Okay.
I'm going to make one more point about this substandard rating thing. Kind of building off of talking about the older generations or maybe people with less than spotless medical history. It's okay to be where you are. You can't go back and change anything in the history. You can't change what that doctor put in your medical record. All of that's behind you. And every bit of emotional time spent worrying about it or hand waving or hand wringing or all of that anxiety is not going to change it at the end of the day. So it's okay to get into a life insurance policy where you are right now. Or you could delay. And every moment that you delay is a segment of the most efficient cash value and death benefit generation that you are chopping off the life cycle of a dividend paying whole life insurance policy. So wait as long as you want. Give up as much. The opportunity cost is increasing all the time. And you can add to it as much as you like. But my encouragement is to not do that and to embrace what we're talking about here, that you're medical record, your underwriting status is what it is. The life insurance companies can't even control that. There's all sorts of guidelines that they've piled up on their backs that they've got to, and we want that. My gosh, when you're buying a policy,
regulators have piled up on the insurance companies. Back.
And like when you're buying a dividend-paying whole life insurance company, you're not just buying the policy, you're buying the company. Do you want a company that's run on legitimate, solid actuarial science, or do you want a company that's going to cut corners to give you a rating class to make a sale better? Like what do I want? Do I want a company that's financially robust and is by the book, built on the science? Oh, this gets me to, this whole...
Well, the other one...
Well, we did get that in
the other one is like, look, a company subsidizes its dividends. They have all probably done it throughout history, but talk about legitimate books. Like, you almost have to be an actuary, a forensic actuary or a forensic accountant to look at the P&L statements of some of these life insurance companies. I'm just saying, can we just not play games? If it's a lower dividend, can I just have the dividend? I don't want to index a dividend. I don't want you to subsidize the dividend. I just want you to pay a straightforward dividend.
What if I get a 1.2 multiplier on my dividend?
Oh, my gosh. All right, but well, go ahead and close.
So my final point there on the rating question is and I get this from you, so credit due. If you are rated, if you do have a less than spotless medical history, the first line of thought might be, oh, I should insure somebody else. My encouragement is to rethink your thinking on that. Because if you decline the opportunity to purchase life insurance when it's offered to you at the rating at which it is offered, and you allow time to march on, if one other major medical event occurs, or if your attained age rises and the mortality cost along with it rises, you might just become totally uninsurable. So rather than turning around to see who else you can insure, my admonishment, my encouragement is, like you say, James, to back up the truck and buy as much death benefit to pay as much premium as that life insurance company will allow you to. All right? And I have to say, this happened with a family member in my own family. Right? We submitted, was it 2 or 3 years ago? Table rated, right? Table rated, and not A or B, right? Legitimately table rated.
They're all called table ratings. Yeah. Table A, Table B, Table C, Table D.
Right. And for a legitimate reason. I mean, there was a hospitalization. There was a legitimate reason for a table rating. And we backed up the truck. Get as much death benefit as possible. And do you know what happened not 6 months later?
No.
An additional hospitalization due to high blood pressure. Instantly uninsurable. Given where she was, given her medical history, had this additional medical event been included in the record at the time of application, forget table rated. Sorry, we can't extend it. That's what would have happened.
Right.
But because we applied her before that, and not because we saw the future coming, we didn't know that was going to happen. Of course, didn't want it to happen. But because we applied when we did, and we got the policy in force, and now she's got the ability to pay premium for as long as the industry will allow, and God will let her walk around, And
it was constructed properly, so it's not going to mac in the future.
Nope. Didn't sacrifice the integrity of the policy.
Exactly.
And we did back up the truck, so she wasn't able to pay the full PUA in the first year. Oh, but that's okay. That's okay with the companies we work with.
Sounds like it worked out.
I mean, you kind of look back and it's like,
yeah. That's. I'm glad you mentioned that, and I appreciate the credit. Whenever a legitimate company, makes you an offer at whatever rating, and there are some ratings. I mean, I learned this long ago in my career. These life insurance companies are deadly accurate. Pardon my pun. Right? They're just properly pricing the death benefit. They know how many 55-year-old men are going to die this year, next year, 10 years from now. They know how many 27-year-old females are going to die this year, next year, and 10 years from now. They are very accurate. So if they're legitimate, and most all of these companies that are in the most all of mutual life insurance companies are legitimate companies, and even an awful lot of the stock companies are legitimate. Okay, listen, whenever they make an offer and you're insurable, and we all have limitations on our insurability, age and income and health, right? Age and health. Financially, it's income and assets. So there's medical underwriting, financial underwriting. All right. And so we're all limited. Nobody can be overinsured. The hucksters that, oh my gosh, going back in history, I'm worth more dead than I am alive. Well, you should do better in life, right? I'm overinsured. You cannot legally, legitimately be overinsured. It is not possible. Okay, at the time of underwriting anyway. All right. My point is this. Whenever there's a legitimate offer, it is thank you for the offer. How much will you issue with the information that you have? I don't want to continue any more underwriting. How much will you give me right now? And then you reconstruct the policy, get it in force.
Oh, there's a whole nother reconstructing a policy. Yeah, I might have to adjust the design based on an underwriting. Ooh.
Oh, and then too, I mean, we're going back, and I'm just rounding out this, buttoning up this idea of younger people. Listen, build the correct foundation. If you want to become your own banker, you want to leave a legacy, you want to just be active in the financial world, you want to participate in the economics of your life successfully, okay? You start with yourself, whomever you are. If you're insurable, you get policies in force on you. If you're not insurable, there's a potential, the possibility that you can transfer your insurability to a spouse if you have one, or to your children if you're uninsurable. Right, Nelson has one page about, what if I'm uninsurable? He spent a limited amount of time on it, but it's very powerful there. Okay. Build the correct foundation. If you build the correct foundation, and there is a correct foundation, and there is a correct path to expansion, okay? Yourself, your spouse, your children, business partners, yourself, your spouse, your children, all right? And so there's a correct way to do it.
Absolutely.
Okay.
I feel, no, that's good. So that was, well, the last thing I'll say on ratings is that, like you said, it's not the end of the world if you're not insurable. I mean, we'll take care of that. If we need to.
What does that mean if I'm not insurable and you're going to take care of that? You're going to pay a death benefit if I die? What do you mean?
I mean, we'll find a way to get you to become your own banker with the appropriate policy in the case that you're not insurable.
Thank you.
That's what I mean. I'm doing that right now with some people. Got a medications, dictionary full of them. So
listen, and it's okay, to continue to improve. If you don't know, how can you address something if you don't know? If you have a health issue and you don't know, I mean, you're shortening your life expectancy.
Right.
If you do have health issues, just be proactive. Don't abdicate your responsibility in that field either. And it's who doesn't want to improve? Mm-hmm. It's okay to know where you're at. Well, they think they're improving when they expand. I mean, of course they don't want to improve. They'd all go home tomorrow. Close the doors.
I know. Saying all of them, the judge gonna get you.
Let me say, I don't remember what episode this is. It's coming out. A friend, a client, came as a guest, very gracious. And if I had to be judged by a peer or a human being, I would want it to be him. Mm-hmm. All right. So are we going to work in?
Let's wrap this up with some stories from the Frontline. I know you've been itching. My gosh, can keep you.
I've already shared
particular segment for at all. So what happened this week, James? Anything on your mind that you want to share?
Well, no. Here, this is like last week. It was on a Friday, culminating the week. I mean, we work daylight to dark. I mean, we're. I know we make it look easy. But we work, the staff in this office, in this practice is incredible. They're the reasons I'm able to make it look easy. Thank you. And my clients know how professional and competent the staff is. Anyway, last Friday, it was a long week. I fired 3 clients or 3 people that were in the process. You know, and I'm just sharing that, you know, when you reach out to us, and you should, I mean, if you want to practice the infinite banking concept, there's the greatest policies in the universe, the best policies in the universe, the best plans in the universe come from Alvarado, Texas. Okay. And I have both feet on the ground, and I'm just sharing.
Dude, your feet go all the way to the ground?
It's like Goliath here. So anyway, for whatever reason, and it turns out these people have gone through other people's, engaged in other people's processes, and then they don't disclose that up front. And if you're engaged in other agents or advisors' processes, God bless you, go through their process, take that to a complete end, whether you become their client or y'all part ways. I don't want to armchair quarterback any of them. Most of the legitimate people in the infinite banking world are friends or colleagues. I mean, we know them. There's the hucksters and the fringe people that are, you know, trying to talk about life insurance and infinite banking that, you know, have their click funnels. I mean, they're not even legitimate financial people, in my opinion. But they're great marketers, you know, God bless you. I'm not disparaging that ability. Anyhow, so it's emotional, you know, whenever agree to encourage people to move on. Anyway, last week, I mean, I'm getting to the point here. There's, you know, a couple of people in our process that, you know, thank you very much. We can't be of service. I appreciate you. Wish you the best. And there's some troll comments, you know, on social media that, you know, I don't allow them to be released because they're speaking out of spite or ignorance or both. But, you know, you have a tendency to, you got to be careful to not let the negativity affect you, right? So I wasn't doing that great of a job last Friday.
Opportunity for improvement.
Always, every day. But then, lo and behold, I get a letter, and I don't have it in front of me, but it said along the lines of, and this is Felipe. Thank you, Felipe. Brand new client. And he says, James, I just want to say thank you to you and your team. We've gone through your incredible process, and a substantial premium check. I mean, it's substantial. Mm-hmm. It's substantial. It's legitimate. And so the premium check was enclosed, and he's saying thank you. And he says, this is my 6th policy. My premium is just about equal to my income. That's not where we started, you know, at all. He's a relatively new client. And it was so encouraging to read that, you know, after a hard kind of a week. Yeah. And I mean, substantial premiums, and saying, thank you. Your process is incredible. Your people are incredible. Thank you. And it's like, wow, this is why I do what I do, you know, for that people. He said, thank you on the behalf of me, my family, my future children, the future IBC practitioners. He's thinking 2 and 3 generations in the past. And this guy has done his homework, right? And now, little did I know that some of the previous policies, I found out this week, some of the previous policies are written with other agents. And he's like, James, can you be the agent? Can you be the agent? Can you be the agent? And anyway, that's one story from the front line. I have more.
Good. That's good. You mentioned, just as you were talking, a couple stories that are very similar. We talked about them earlier in the week, but focusing on the positive. I had one guy, you know, they travel, you probably will know who I'm talking about, but they travel around the country in RV and got kids, and watched a lot of the episodes, read the book, and just the most, you know, there's this Hollywood depiction of commerce where successful people, it's always got to be cutthroat, and it's always got to be, I'm getting something by you and all this, and that whole, and I don't think that we identify it, and I don't think we're aware of it. We kind of just assume that if someone's doing well in business, or if they're doing well economically, that, you know, they must be, and a lot of them are thick-skinned, or, you know, they're tough, or it's got to be combative, and somehow,
oh my God,
you know, all the war analogies start pouring in. You know, that's just a myth. It's the experiences that I have with clients who, like you say, and when we say paying substantial premium, it's all relative to somebody's circumstances, right?
Absolutely.
It's compared to the income, compared to the available premium source, the ability to pay wherever you are. And so we say someone's paying a substantial premium given their financial circumstances, and the conversation is just pleasant, and they've done their homework. It's like, the life insurance company is going to be late sending the commission check anyway. So I live off of that mutual respect, the getting to hear in their voice the light bulb moments. They've got a few questions that we haven't touched on maybe, or they're still unsure about, and we clarify that, and you hear the satisfaction over the phone or on the video call or whatever. And it's just a superior way of doing commerce, So that's my positive story. Like you, that was, bookended right up to a less than positive story. And you say it a lot, and it's true. Most people's conception of life insurance based on other people's misconceptions, and that goes for other advisors' misconceptions of life insurance. And so, I get people sometimes who like you said, they've gone through or they're currently in other advisors' processes, and God bless them.
Quite frankly, about half of those are abusive, from what I hear.
Yeah, well, I tell people, I don't really care who the other. It's none of my business. But just like you said, see that relationship through to a satisfactory end, and you get to decide what satisfactory is. If that means you're going to get policy or policies from them, God bless you. God bless them. If that means you're going to exit their process promptly, God bless you both, right? Just see that through to a satisfactory end, because when it comes time for us to do business, by gosh, we're going to do business, right? I'm going to respect your time. I'm respecting my time. We're going to be efficient about it. We're going to get a policy in force so that you can maximize your capital generation over the course of your lifetime and improve your generations that will come after you, their financial success. We're going to get down to, and like you said, I got no interest in armchair quarterbacking or training agents for free through the phone. The opportunity we talked about this earlier. I did a little math.
He was shocked. He shocked himself.
I did a little opportunity. I like the idea. Let's help others, bring up others, and that's all legitimate. But I did a little analysis of the opportunity costs involved, and it's like, so I'm just...
Well, let's just spend a little bit more time on that, because you were like, you had some revelations there going on.
Yeah, well, at the end of the day, I was wrong. It should be obvious, and it now thoroughly is, that the best use of my time is in serving the people who have done their homework, who want to become their own banker, who want to pay legitimate premium. That is the best use of time, period. End of story. You
shouldn't be training agents. You shouldn't be combating people who have a misunderstanding of life insurance based on somebody else's misconception. Or they're like, a national church leader, director for their financial program in a church.
Yeah, and I don't have time. So
trying to put you on the defensive.
Exactly.
Insult your intelligence and your character based on their ignorance.
And I'm just saying, if we spend 30 minutes on the phone, and I know he's probably listening, but this is what it is. If in 30 minutes you tell me 3 different times how proud you are to be anal about...
They're probably anal.
Okay. I've got this positive experience I had, the positive experience that you referred to. I've got these fulfilling, meaningful, wonderful conversations and business to do. And unfortunately, I just don't have that kind of time to go back and reevaluate and correct the preconceived notions. I had an email from a guy, asking, and it's like, I just get beat down by it. Now I have this rule. It's like, I'll give anybody 20 minutes on an introductory call. I'm kind of, instances like this are making me rethink that rule. If you send me an email and you want to know about net zero policy loans and the 4% guarantee and the 1 and 2% addition to the guarantee, and you want to build up as much cash value as possible in the first year so that you can go invest in cash flow real estate, and you want to become a referral source. This was all in one email. Okay, I'm exhausted.
Sounds traumatic.
I'm exhausted. I've just read through that, and it's like, just like you say, every minute I spent is a minute I will never get back. after having read that, you know? And so it's like the little idealist in me wants to be like, oh, if something's gone wrong in the past, let's do our best to fix it.
Sure.
And my opportunity for improvement is to recognize that I can't help everybody, and that the market is, like you say, you know, the market will find your weakness and it'll just crush you until you adapt, you know.
It'll stomp all over it.
Just beat you down.
Until
it's
you
like,
correct
okay,
it.
I hear you.
Yep.
You know, the time is better spent with those individuals who haven't, unfortunately, or who fortunately have not developed those incorrect preconceived notions, be it because they watched the internet marketing hucksters or because they were engaged in another advisor's process who couldn't get the wall of numbers in front of them fast enough.
Oh, yeah.
You know, that's not to say that if you've been previously engaged with others that you're instantly off the table. Don't get me wrong. I mean, in fact, it's quite the opposite. It's like if you've developed the awareness, the ability to properly classify, going back to Nelson, if you've been through the ringer and you've already acknowledged those preconceived notions and hopefully discarded them, then, you know, the path is clear. We can get some business done. You know, we'll get you the ability to pay a premium. However, if on the other hand, we've become wedded to those preconceived notions, and perhaps because you made a financial decision based on those preconceived notions and are therefore more wedded to those preconceived notions, just know that it's going to be very difficult and probably not possible to move forward in, you know, right now, 2020 America, you know, at present, right? There's just, time is better spent. You know, otherwise,
the way I see it, look, there's over, 100 hours of video or audio that we put out, that I put out previously. If you can't figure out my character, if you can't figure out your character, it's not about me.
Yeah.
You know what I mean? It's like you should be able to properly classify. And I am so appreciative of the people that reach out, because what I hear every day, day in and day out, and it's a little negative stuff that, you know, try to keep off of you, but and that's rare. What I hear consistently every day is, James, thank you for your effort. Thank you for your work. Thank you for your education. Thank you for what you're doing. And every day I hear how positive and competent and pleasant the staff here is, the team. They're like, oh my gosh, do you realize you need to give them a raise? You need to give them a bonus. You need to give them a raise. And I'm like, yes, I know. Everybody here is underpaid. I get it. And that is like, they probably don't hear it as much as I do. It's like, man, Carol this and Julie that and Cammie this and Jake that. It's just, thank you. Very positive, and it is such a difference as a financial person trying to sell a product, right?
Selling
I know.
product.
And nothing wrong with salesmen. You know, I'm just saying that compared to properly educating and clarifying, because they've done their homework. They've done their legitimate research, Nelson Nash's work, right? And some others. I mean, I'm not saying there's not good things popping up on the right, but you got to walk through an awful lot of trash to get to some value, my opinion. When you take the time, you know, I don't know how many times I've had people say, thank you, James, for mentioning the 8-hour seminar of Nelson. It's like, oh my gosh.
Yeah.
Then they come and it's like, I just, like you mentioned earlier, I have a couple of questions. I think I understand this, but I just need clarification on this or that. And it's like, how much can I pay? I mean, you get it.
Oh, yeah.
And how am I going to expand? There's this, and this. How it makes work pleasant.
Mm-hmm.
So,
Sure
okay.
Does.
What else?
Listen, I'm just keeping in mind
You're hungry?
that the state of Texas has allowed this barbecue joint to open, and
What? Let me bring this up. This is what is today? Today's the 16th of May.
Yeah.
All right, and I'm kicking around this great suppression, strangulation,
oppression, destruction.
The destruction, the intent, the purposeful intent to destroy capitalism in America.
Criminalization of commerce.
Oh my gosh. I would just want to say I apologize for being so generous in my terminology when I address this corona hoax. Like, oh, I know there's a legitimate virus going on. And I'm like, no, there is a virus and people die. People die every day. This destruction of capitalism is beyond criminal. And I don't know how more straightforward I can be conveying that we collectively need to realize what's going on and do something about it. And let me say that the infinite banking concept is the antithesis of what's going on in the economy. The destruction of all these businesses by brute force. If these businesses, it would have been helpful, it wouldn't have hurt, it wouldn't have compounded the problem if they'd had legitimate access to capital and not dependent upon third-party lenders. I'm just being encouraging. Okay.
Yep.
And I'm ready for barbecue today. All right,
Sweet.
Let's go. Peace.
All right, bye, y'all.
Love, peace, and chicken grease. Thanks. Live free and independent.
Thank you for joining us on the Banking with Life podcast. If you're watching on YouTube, make sure to like and subscribe and click on that little notification bell. Otherwise, join us on Apple Podcasts and Stitcher for weekly content.